morning, everyone. Welcome to the European crossover webinar. As we get ready for non-farm payroll, we did see a pretty big slide here in equities yesterday in the U.S. session. We did get a bit of a rebound, and we've seen that going and retrace back, sliding back here in NASDAQ. Did get a little bit of a blip here. Let's move a little bit higher. Might have to do a little bit with the dollar, just paring back just a little bit as the euro rebounds here. We'll go and take a look at the data that we have right now, which is going to be Italian retail sales. Nothing coming out yet on that, and that's going to be it until we get into the non-farm payrolls. They are looking for 3.5%. Also looking for Canadian jobs. That's going to be looking for 5.2%. And let's see here. Okay, which says good morning. I was concerned that maybe might say can't hear your audio. Here we go. And let's see, they're looking for 380,000. Last month was 431. I'm not really concerned about any of these other internal piece of data. They really don't make any difference at this point. It's, you know, they did when, let's say, the Fed was looking to keep lowering rates or being accommodative, or when things were starting to turn and we starting to see improvement payrolls, what type of inflation. None of this matters anymore. It really doesn't at this point. We're not at that juncture where this really matters. Some people might try and parse through it and say, oh, wait a minute, you can see the inflation. Look, that cat's been out of the bag for a while. Doesn't make it, all to be doing is affirming. Oh, we are confirming there is more. We don't need you to confirm anything or affirm anything. That cat's already out of the bag, and just basically saying I can tell you for sure it's raining. Well, I don't need to tell me it's raining. I can see that it's raining. So all this stuff to me means nothing. It's all meaningless. It's not like as if it's going to make a big difference. If it's going to be like, the only difference would be like a big surprise. Like, let's say instead of 380,000, they only get 150. Okay, so that would probably allow the equities rally because it looked like that the Fed may be able to ease back a bit. Not necessarily that I'm saying that's the way the market would take it, but other than a surprise like that, that's the only thing that's going to matter. It's going to be the headline. There's a surprise. None of this, as far as this many employment, wages, earnings, participation rate, none of that is going to matter whatsoever. I am seeing here Fed Williams is going to be speaking. We do have Canadian IBPMI at 10 a.m. Eastern. And let's see, that is going to be it, other than Baker Hughes oil rig count. So once again, like I said, that's essentially it right there. Nothing else. Let's go on and move into the analysis. So here we are with the euro dollar. It still remains under pressure. We got below this key weekly level. Now we are on the daily chart. You can see here. But we've got the weekly levels that are, considering how much we've fallen, is more of what we're looking at. Bear with me. Hold on. Try to expand this a little bit to make it easier to see. So essentially, that's what we're looking at now. There was some concern or a headline about inflation, and that's put a little bit of a bid under the euro. To me, it's just going to be about this 493 and 453. So for support, 0.493. I really don't see the dollar making another new high. When we look at the dollar, 382 is a key monthly level, and beyond that we have 425. And I just don't see it getting past this. There is a 466. I just don't see it. We've already had such a mercurial run here, and 10-year rates right here to 310. We finished the day at 306, and I think you pretty much knocked everybody out of the box. Anybody that had to sell pretty much has sold. I'm talking about interest rates. I'm not talking about their interest rate exposure. I'm not talking about equities. You have more to go there, but what I'm saying is I think that they pretty much knocked everybody out of the box, and the dollar actually should have been able to take out 104 yesterday on this headline. It probably should have gone up to like 425. So I don't see that going any further here. There's 453 if you just want to say, okay, so let's go here, there, 53, there. That's the extent of one's exposure, I believe, in the euro on the downside. On the upside, if things will start to kind of turn around, it's going to be 635. There is, obviously got levels here at around 583, but like I said, right now, we could move up there and the market just rotate right back down again. So the key level is going to be 635. Everything in the middle is just mishmash. You can fall back down to 510, you can rally up to 575, and you're just going backwards and forwards and backwards and forwards. All it doesn't really make a hill of beans. Moving into the cable. This is continuing to remain under pressure. Let's go to the weekly chart. So you do have this one little push up here, and then the way this market closed right back down, so that'll be a key level there. That's 22.95. 22.95. Actually, the low we've had already is 22.74. So I'm gonna go with 22.95. We've been lower, but that's all to me. It's just going with the levels. Yeah. That's 22.50. So once again, I don't really see that going beyond that, but if you want to, as an extra, same thing, 50. So if you plant your flag in the sand or in the ground, like how much, if we were to dip back down there, what other additional level of support we have. And this is on a weekly chart. On the upside, we'll take a look at the daily. Not much to hang your hat on there. So let's move on to 2 hour. Right there. That's 23.73. Wow, holy smokes, we've fallen so much. Well, yeah, now let's go to 23.26. So okay, 23.73. And beyond that, 24.11. Next up is going to be the Aussie dollar. This is really taking on the chin after being a high flyer. Support, the old 70.33. Don't necessarily see it making it all the way back down here, but now you know where it is right there. This is probably going to be your support right there. Well, that's not that far away, 7.46. Boy, look at this. Man, what a dark cloud cover on that. Resistance is going to be right there, 71.60. And moving on to the dollar yen. See, so despite us getting up to 310 on the 10-year rate, we're still not taking out new highs. I will give it this, it's above 30.36, but resistance 31.02. I don't necessarily even see it getting there, but they may try and goose some stops. So support right there, 29.69. Followed by right there, just below. It's called 29.05. And you can see here, the market respects the level. So I really don't care what some stupid Japanese minister said or what the Bank of England said. I don't care about anything what those people say. The only thing that matters is the levels. And you can see here, tell me that the market doesn't respect the levels. You see that? That's all they go by. When someone says, well, you know, I'm long dollar yen, but you know what, if Hashimoto or whoever says this, I have to exit. No, they go, you know what, I'm long, and I tell you what, if it takes out 29.31, I gotta get out. So once again, like I said, I go by the levels. I really don't care about the headlines. If that's the case, then why the heck, you know, we saw US equities rally on FOMC day and then turn around and give it all back and then some, which we warned about that in yesterday's European crossover webinar. I just didn't think it'd be to that extent. But I said, you know, it's not the same as it was before. We could actually start to slide back. But like I said, that's all that matters is the levels. Next up is going to be the cash dollar index. And we're going to go to monthly. And you can see here we are. We've got 382, which we've had this on here. Let's see, 382. And then 0425. I don't see it getting up to this 463, but that's key. But I had 425, so we could goose it, but I still like this 382. Once again, we should have been able to take out 382. We did, I think we got up to 392, but we should have been able to blow past, and we have gotten up to, I believe, to 104.06. But we should have been able to blow past that yesterday as 10-year rates continue to soar. And we haven't. That doesn't mean all of a sudden it's a short, but I just think that it's going to be limited. We'll probably start to see this maybe pair back next week. But interest rates, as much as they've jumped up, we should have seen the dollar index really take a big leap. So we'll see what happens. Maybe we goose some stops, and then by the end of the day, we'll kind of pairing back. We shall see. On support, let's go to 2-hour chart. And you can see on this 2-hour chart, look at that. And come back. See that? Support, go with all the touches there. Right there. 338. Followed by right there. 297. Let's go move into Bitcoin, the big store of value. It's pretty much a joke. So much for people using this as a store of value, and it's going to be the blah blah blah, and it's going to 150,000. No, it's going to 300,000. No, you're crazy. It's going to 2 million. Yeah, okay, if you say so. So anyway, here we are once again. Like I told you, it's all about the levels. Where to go down here? Look at this. Well, what do you know? And that's what I'm saying. You can follow all the news you want, but understand markets react to levels as far as valuation. Wow, if it gets out, if it gets, I gotta get out. You know what? I'm short. I'll tell you what, I'll look to go and cover at this level right here with these touching it. Where's the market bottom out? Right there. So if you want to trade news, you can trade news, but ultimately the market reacts to levels. Levels are where people say, I'm gonna get out at that price. They don't say I'm gonna get out on this headline. Went right here to 35,469 right here. There's support. I wouldn't be surprised, depending on how we close in equities, although this was supposed to be a store of value, that we go in and break beyond this. But at least for right now, support's right there at that level. You see right here, it's the body right there as the body opens, which is 35,469. But this is right there, 34,346, and then this big one right here. I'm gonna go with 33,198. And before there, $34,244. Resistance, let's look on a 2 hour. And that was actually on the daily. We had weekly. Let's do the daily. There we go. Resistance, we're going with the levels. See right there's touching 37,075. Followed by 37,710. Moving into the S&Ps. This thing's in pretty bad shape. Looking right at 40.93 right there. Let's go. It's 4107. $40.82. and 63. Because when you can't break lower, but I'm just saying those are what we're looking at. Once again, we're starting to stifle a little bit on the 10-year. I just can't see it getting beyond this 310. Anything's possible though, but we did start to pare back yesterday. Upside. $41.50. Followed by 41.70. Moving into NASDAQ. Right now, resistance would be 12,905.65. It's gonna be right there. Let's go. 935. $990. $13,028. Oh, Richard said, why did you change the high of the previous on the NASDAQ? Because if we were to go on and take out, let's say for some reason we got a big surprise on as I talked about, let's say that I told you that on US non-farm payrolls, see how they're looking for 380,000 right there? and I told you, I really don't care about any of these numbers here. The only difference, because I mean, it's already out there. That's the same. If the Fed, you think, wait a minute, those numbers used to count. Yeah, like if the Fed was deciding, should we go on and be raising rates, let's say 25 basis points for our first hike or 50 basis points, then we'd be keying in on participation rate, we'd be keying in on the work hours and also the wages, okay? But that ship has already sailed. You see what I'm saying? All you'd be doing basically is affirming, look, the work hours increase, so who cares? We already know that. But if we were to get a surprise, which is what I was stating, if we were to get a surprise, I told you, I don't even really care about this. Now, if instead of 380,000, they get 100, let's say 150 or 140,000, yeah, then probably at that point, then the market, true or not, the market will say, well, wait a minute, they're probably not going to be able to do 50 now. They may, instead of doing 250s, they may just do 150 and hold off, or they may even go as low as 25 basis points, thinking that things aren't as maybe they're starting to slow down just a bit. Not a whole lot, doesn't mean they're going to reverse or even stop, but the market would take it back to a certain extent, at least technically. So instead of us getting beyond this area, they'll probably push up to this area right here. And if you look here, you can see here, if you look here on the way back down, you can see here it's just going a little bit lower. But the difference between these two is you see here, the market dropped all the way and it actually tried to challenge and come back up here. That's why I put it up here at 12,990. You see right there. This one just kind of scooted up a little bit higher, but lots of times with NASDAQ, you'll see some, well, really with all markets, you'll see some overshoots. But if you were to say, look at this high is significant. No, it's not, because look, the wheels were falling off the caboose here. You see, like, let's say right here. That's not a significant high because it's not a reaction. You see what I'm saying? It just was more follow through. You see what I'm saying? But this one right here, you see the market opened here, which basically where it closed. It did try and get up here, but it fell all the way back, but it came back. So if they're going to test stops, it'd be right there. You see what I'm saying? That's what I've got here is this 13,030 and also on this 12,990. You see here, the market opened right here and came all the way back down. It tried to go and challenge here, but look on here, right there. Look at that. Look how it opened low and it tried to rally back and it ran out of gas. So to me, you'll probably be able to take the stops out right there. Doesn't mean that that's the end right there, but my guess would be they probably want to take out the stops. They may even get up to like right here, 13,003, and then roll over. And that's why that one has more significance to me. So I hope that makes sense, but lots of times I see that's the way NASDAQ will go and trade and test those stops. Next up is going to be gold. So usually each day I'll come in and I'll update the levels on the 30-minute, the 10-minute. So I'll go and expand on here. Let's go on and just to come over here. Let's see. You can see here, so now I'm over here and I'll go and update the levels on the 10-minute. You can see this morning we were just under pressure and it just kept dropping it and dropping. And it goes back to what I told you. See how the market reacts to the levels? And they came up here as they rebounded off of here because the dollar started to pull back. I think it was Villeroy was saying about the currency being so weak, so it's allowing the dollar to pare back and allowed this little bit of a rebound. But this morning, it was just under pressure, and there wasn't even a lot of volume. If you look at here, the volume wasn't even that great. You just kept dropping and dropping and dropping. You couldn't even get a bid, and then all of a sudden, and I remember here yesterday in the U.S. session, this was a key area in the 50s, and I almost took a long. I didn't take a long, but I thought about taking a long here at 57, and we saw this drop here, and I go, you know what, that's probably, I think that's it about there. And then also we jumped up real fast to 65, 70, and then we kind of came back in and settled and just kind of sat there. And I guess maybe they started market had fallen so much, and then we already got those headlines, and then it just started scooting. So you'd be looking at, well, how much further can it go? But once again, like I said, you'll see me update. And NASDAQ is has a tendency to go to prior highs. I mean, they'll go to the rebound high, and then I hate to be, now it's not so much of being an algo type of person, it's just that's where they have those numbers. They'll be clocked in and they'll say, okay, that last time you see Jedi Marcus will say, that was the afternoon high, that was the high on this one, and the market will go up there and tag it. So that's why I'll mark these off here. And that's just the tendency of the way the NASDAQ futures going in trade. You have to go with, that's what I say, know the market you're trading, whether it's going to be euro or cable or whatever, how it goes in response to some of these levels or how it trades them. So let's go to gold now. So you can see here, look, there's our number, remember? Look at that, 1908. And look at this, 1908. And it's not because it was a specific thing. That 1908's been key for a while. I'll put it to a 2-hour chart. And you see the significance of 1908? You see how the market was rotating around here? I think we even come up to 20 or whatever, but notice that this 1908, you see here, the market, look, I'll show you, look, it falls apart. Then we have a little bit of a battle. You can see here, it looks like, okay, we got a little bit of a hammer. Oh, wait a minute, we're on our way. Then all of a sudden, look at the bearish engulfing bar. So this is bearish right here, but I'm saying this because even if it rallies, you know that it's going to be a tough time unless it takes off. They're still going to remain under pressure, which it did. You see here, they rally back, and where's it run out against? 1908. See here, 1908. Then we fall down, and fall down pretty good. Look at this, all the way down to 1883. We rally back 2 days later, and where's it run out against? 1908. We fall all the way back down to 1860 in the 660s. We rally back here. Look, the market gets up here, and look, we kind of run out against right here, just at 1908, but the market's still strong. Okay, we get up here to 1920, and look how the market's used as a cushion. Basically, the market's telling you, as long as 1908 is holding, I'm going to be long. I'm not talking about me. I'm just saying those that are bullish. The other ones are saying, hey, look, if 1908 gives, I'm getting short. So you can see how 1908 is holding. You see, they took it out here, but notice they couldn't close beyond it. You see what I'm saying? So like, okay, I'm long, I'm still okay as long as it's not going to close below 1908. They test 1908, but still they close above it, even though it's a bearish thing. Same thing here. Look, they tested 1908, it holds, but they close right there. They go, man. So some people who are bearish, they're licking their chops. Man, we get below 1908, I'm getting short because we're going to go lower. We get below 1908, look, all these stuff start hitting. Boom, 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 boom. We kind of hold here, but because of all that selling, you know they're going to have to press lower because even if someone's bullish, they've already been screwed here at 1908. So they go, I'm not going to buy here at 1896. I'll wait to see if we challenge 1883. So sure enough, they're not going to see any real bids until we come down here. You see here? Then I guess this is where interest rates are really taking off. It's under pressure. Finally, we take a run, and where do they run out of gas? 1908. What was our resistance yesterday? 1900 and 1908. And that's why I say it's all about the levels. You can follow the headlines all you want till the cows come home. You can follow all your oscillators and all that, but it's all about the levels. I mean, I'm not going to, like I said, you can trade the way you want to trade. I'm not saying the way I trade is right. I'm just saying I've tried just about every technical indicator of the book, and this way and that way and this way and that way. And I'll tell you what, at the end of the day, it's all about the levels. Like I told you, I'm gonna stay long unless we get a close, a 2-hour close in this case below 1908. I'm gonna get short if we get below 1908. They didn't say, oh, if the headline comes out and they say gold exports is this, I'm gonna get long. Look, this is all that matters. That's what I'm saying. And so at the end of the day, someone didn't say, wow, I'm down. If I get a headline that says go tonnage is this, I have to get out. No, they say, look, I can only take so much pressure. If it gets below 1908 on a close, I gotta get out. Me, I'm getting short on a close below 1908 on the 2 hour. And that's the same. They don't do it based on headlines. But if you want to track things on headlines, that's up to you. You know, that's the way you want to trade it, then fine. That's the way you want to trade it. Well, that's what makes a market. Everybody has their own opinion, what they think works or doesn't work, or how it matches their profiles. So anyway, so here we are. So where are we going to go right now? So I'm just going to keep it simple right there. You see that? Reacted to it. But like I said, if we do get a headline, let's say we did see something like 135,000 versus what they're expecting 381,000, which once again, you can see right there, I'm just using an example. If you get a number that's outside the box, that, that not like 270, 250, but I'm saying like something like 175, 165, like, whoa, it's already having an impact. And it's not, the Fed's not going to stop, but the market's going to say, oh, well, we'll allow the market to rally back up before they'll put on more shorts again. So that would probably allow interest rates right here to come back down. Let me get this here. We allow this to go in and come back down, maybe challenge back in here to the at least 299, and maybe challenge the 290-ish here. It won't be much, but I mean, it'll allow this thing to bounce. So I'm going to go back to 1908 is when I'm going to hang my hat. 1908, if we were to get a reaction. Anything in the middle, just like I told you about this, the euro is going to be just on a mishmash. We might rally up to 1896. I'm not going to say 1900. Look, the 1908, I'm sticking by that because I think that's going to be a pivot. So let's go back up here. Now, if you were scalping gold, then you probably say, well, where's the next area? And it would be right there. Because you see, you got a touch here, you got this rally here, you got this one right here, and look at this one. You see how these two, so I'll highlight this. If you were scalping it, you see these touches right here, and I'll highlight it in magenta. You see? Yeah, oh, okay, I see that. We were down here at 1849, and we rallied, and where did we run out of gas? Approximately right there at basically 1890, okay? And then the next bar, we got above 1890, but we couldn't fill the bill. You see what I'm saying? We couldn't close above it. Then we got above it, and it was blue skies ahead. Woo, we're on our way. But then the market, like, they couldn't fill the bill, holding above 1900. They fell back. Where did they come back to? Right there at 1889. You see that? Or 1890. Then we bounce off of that because that was support. We take off, we're on our way. But remember, here's the big old 1908 that I talked about. So we can't close above it, and the wheels come off the caboose, and like they're trying to find some support here, but it even takes the stops out there, and look where they found support. Same thing, where you go with a group of touches right there. But it's only temporary because this was huge. And like, man, we failed again at 1908. So they're going to have to press even lower. And once again, interest rates are going up higher at that time. So no one's going to stay long. So that's where we're at. For support, I would go with these touches coming across right there. 1861. And we could look, once again, if we were scalping, we might say, well, don't you think if you look at all these touches, how about right there, 1866? Maybe right coming across here. You might be right, but once again, this is non-farm payroll. It's a Friday. We had the markets under pressure, and we had interest rates up here. So we're looking at the bigger numbers. You see what I'm saying? Just like I said right now, you could be looking at 1890 and maybe 1896. No, look, if the market trips, and I'm saying, let's say this number comes in, I'm not saying it is, I'm just saying it would have to be an outsized number on the downside. So it comes in at 135, then you'll get a knee-jerk reaction. And to me, I'm only concerned with those pivots. If we were to get a really low number and things were to really turn negative, not turn negative, but the market turned on its head, then 1908 would be the pivot. Once you got above this pivot, then we take off, and this would be your first stop right there, 1928. And that 1928's been key before, that 1928 size 32. Oh, okay, sure, no problem, Richard. And Arif says, have to be so disciplined to be profitable. Yeah, and you're right, it's like a full-time job. It's and you have to find it, and Richard says, is that the yield on the chart? Yeah, it is a yield on the 10-year. So you can just go with TNX, you see that right there? TNX, that's a 10-year. And if it's a 30-year, it's TYX. And I think the 5-year is FV. But I'm just saying, this is what's been moving the things. This is what's caused the dollar to go bananas. Because US interest rates, you get the differential between US interest rates and, let's say, European interest rates. And that's what's driving the impact into the dollar, which is causing, weight on the equities for different reasons. So the last one is crude. The thing is, news only matters when it really matters. And for the most part, it doesn't matter. So sometimes, like I said, if it's something like OPEC and they're having a powwow and all this other stuff, then that's when it can, headlines will drive. But for the most part, these markets are just driving on prices. You see what I'm saying? If it takes out one price, it's like a rung on a ladder. It's just going to move to the next price. And crude moves a lot on momentum. And look at this. I mean, I can't believe this thing. Look at this sucker. That's keeping the pressure on equities too, and pressure on interest rates. Man, look at that. I thought this would have held. You see what I'm saying? This area right there. I was even surprised it took up this area right here, which I think was 108. But look at this. This is key right here. Look at this. You see here? Got this. Now let's go on a 2-hour chart. But look. So let's go to let's take a look there. Let's go to monthly. Let's go like this. Okay, so if we're looking on a monthly, this is resistance, 113.66. You get above that 113.66 and we're off to the races. So it's basically right there at 114. This is the continuous contract. So if you're looking if you're long crude or you're looking where it might get a pause, right there around 1366. 1366. The nearest, most recent high was 1229. So between 1229 and 1366. So let's just go with 1229, we'll just mark it just like we did right there. 1229, 1366. And we're just using the continuous. There's one right there too, right there. This is the last hurrah. You see that $8, 108? Here's the one right there, 112.29. And you can see here, look at this low here. You see that? That was right there, 1143. Match up closely. Basically 12.29. Support. Let's go back to the June. Go back to the 2-hour. Support's gonna be right now at 109, and then followed by right here, 108. Holy smokes. 109, 108. Right there. 107.22. And there we go. There's the bias chart. I'll get that posted, and thanks for joining us on the European CrossFit webinar.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.